Howdy, y'all. Welcome back. It's the Liberty Call for December 28th, 2021. Hope everyone's having a fantastic Tuesday. I am freezing my ass off here in New Mexico. The weather was supposed to be nice this week. Unfortunately, that has not been the case so far. So we've had a little mishap with our trailer. The little skylight blew off because the wind was so strong. So we froze our butts off last night. So I hope you feel bad. My poor wife was shivering and had to sleep in a puddle because we weren't aware that the snow was coming in. So, alrighty. Like I said, hope everyone's having a great day. Let me see if you can see the beautiful outdoors. Just cover that up. No, not really. It's a lot of white out there. All right. Let's go ahead and jump into what's going on in the world. Alrighty. All right. The indexes for the day: the Dow Jones was up 0.26, S&P up 0.14, or I'm sorry, down 0.14. Nasdaq was down 0.56. Small caps were down 0.49. The VIX was down 0.79, even though the market wasn't that great today. It's still sitting at 17.54. Let's take a quick look at across Europe. I see a lot of green. Nothing over 1%, but that's still pretty good. Across Asia, a lot of the same thing. It looks like Japan was probably the best at 137, and everything else came in under 1%. So not too bad. All right, got a couple articles I'm going to breeze through. Nothing too long today. First one is U.S. holiday sales rise 8.5% as online shopping booms. This is from Mastercard. U.S. sales rose 8.5% during this year's holiday shopping season from November 1st to December 24th, powered by soaring e-commerce sales, a report by Mastercard Inc. said on Sunday. U.S. E-commerce sales jumped 11% in this year's holiday shopping season, according to Mastercard Spending Pulse report, yet again underscoring the COVID-19 pandemic's role in transforming customers' shopping habits. Shoppers are also rushed to stores amid supply chain concerns as COVID-19 cases surged, sending sales at physical stores up 8.1% compared to 2020. Shoppers were eager to secure their gifts ahead of the retail rush, with conversations surrounding supply chain and labor issues, sending consumers online and to stores in droves. So some good news. Even with all the garbage that's been going on, people are still out there in the economy and making it move. All right. Next article: dollar lifted by SafeHaven flows, Fed expectations. All right. This was put out by Reuters. The dollar edged higher in thin trading on Tuesday, helped by SafeHaven flows as worries over the spread of COVID-19 sapped a multi-day rally in equity markets, and on expectations the Federal Reserve could raise interest rates as early as March. We already knew this, so I'm not sure why that would make the market act any differently. The dollar index, which measures currency against six major rivals, was up 0.177 at 96.223. The S&P 500 opened at another record high, extending a four-day rally, but then pulled back, while the Nasdaq was in the red the entire session as investors eyed Omicron-driven travel disruptions and store closures. The losses of the Nasdaq are keeping the market a little bit nervous and favoring the U.S. dollar as a safe place to position investors over the next few days, said Amo Sahota, director of Clarity FX in San Francisco. But ultimately, market volume are low due to the holidays, and any moves may have been exaggerated, he noted. Most people want to wrap up and get their work done and get out, so I don't think we're going to see much movement here. The greenback is up nearly 7% in 2021, helped by growing expectations that the Fed will raise interest rates sooner than other central banks. Well, let me pause there. The dollar index actually went up, I believe, late last year, so there was no talk about the Fed raising rates at that time, so I don't know if that's really the reason. I was quite confused last year when the dollar index was rising, with all the money printing that's been going on. So you'd think the dollars would have fallen, but maybe just the other currencies that it's rated against are just that much crappier. So, all right, let's see here. The Fed said in a policy statement December 15th it would, we already talked about that before. The safe haven yen inched higher after having touched a major one-month low against the dollar during the Asian session. The Japanese currency was up 0.07 to 114.8 yen per dollar after having earlier fallen to 114.935, its weakest since November 26th. The Australian dollar, often considered a liquid proxy of risk appetite, was down 0.24 at 0.72225 after having its highest level against the greenback since November 22nd overnight. The sterling declined 0.14, having earlier touched a 1-month high of 1.3461. The euro declined 0.24, and cryptocurrencies, Bitcoin fell below 50,000 and was last down 6.31% at around $47,000. So, like I said, I don't know if it's a matter of the US dollar being really strong or the other currencies around the globe being just trash. So, we'll see. All right, another article here, world economy to top 100 trillion in 2022 for the first time. So that is some exciting news. The world's, if you hear a sneeze, it's my wife. She's sitting over there staring at me. Achoo! The world economy output will exceed 100 trillion for the first time this year, and it will take China a little longer than previously thought to overtake the United States as the #1 economy, a report showed on Sunday. British consultancy Sieber predicted China will become the world's top economy in dollar terms in 2030, 2 years later than forecast. In last year's World Economic League tablet report, India looks set to take over France next year, and then Britain in 2023 to regain its place as the world's 6th biggest economy, Sieber said. The important issue for the 2020s is how world economies cope with inflation, which has now reached 6.8% in the United States. We hope that a relatively modest adjustment to the tiller will bring the non-transitory elements under control. If not, then the world will need to brace itself for a recession in 2022 or 2024. The report showed Germany was on track to overtake Japan in terms of economic output in 2033. Russia could become a top 10 economy by 2036, and Indonesia looks on track for 9th place in 2034. So, some interesting details there. I would agree with about that last paragraph that I don't believe that this inflation is transitory, and we are probably headed for a rocky road. All right, and the last article here is just some FYI for those getting close to Social Security benefits, if they're still there in a few years. Boost your Social Security benefits in retirement with this bridge strategy. All right, when it comes to claiming Social Security, most retirees can't wait to start collecting those checks. A 2020 report from Bipartisan Policy Center found that more than 70% of Social Security beneficiaries currently claim their benefits before age 64. In fact, nearly 35% and 40% of men and women, respectively, claim their benefits at age 62 in 2018. But delaying your benefits beyond full retirement age will result in larger Social Security payments when it comes time to collect. A retirement strategy known as a Social Security bridge is one way to create an enlarged stream of guaranteed income without an annuity. But researchers at the Center for Retirement Research at Boston College recently examined this relatively unknown strategy and found many workers would use it if given the opportunity. All right, the bridge strategy is a method for locking in higher lifetime Social Security benefits by using 401k assets to stopgap. Instead of claiming Social Security immediately after leaving the workforce, a new retiree uses their 401k assets or other savings as a substitute for Social Security until age 70, when they can claim the largest possible benefit. Delaying Social Security until the maximum claiming age of 70 can increase a retiree's benefits by 76% compared to claiming at age 62. According to Alicia Munnell and Gal Wittstein, the Center for Retirement Research at Boston College, that's because benefits increase by as much as 8% for every year you're delaying between full retirement age and age 70. On the flip side, claiming Social Security benefits before full retirement age diminishes a person's benefit. The bridge strategy capitalizes on this incentive and creates a larger stream of annuitized income. Using their 401k assets as a substitute for Social Security when they retire as a bridge to delayed claiming would allow participants, in essence, to buy a higher Social Security benefit. The potential for enhancing annuity income through Social Security is substantial, since the majority of retirees can claim their full retirement benefit, and about 95% of their claim before age 70. So, yeah, it's definitely a good idea. With my clients, I always try to encourage them to delay it as long as possible and build a plan, from, let's say, 65 to 70, so that they can get the extra benefits throughout the rest of their life. But sometimes, shit happens and you have to, take your benefits early just because that's just the way life is. All right, well, that's everything that I had for today. And let me get rid of that. And hope everyone's having a great day. We're going to try to make the best of this, and probably be out and about tomorrow. And if you need anything from me, don't hesitate. Give me a call, shoot me an email. Hopefully internet lasts here, and have a great day. Bye-bye.